Good afternoon. I'd like to welcome everyone to the Virginia Transit Association's webinar, which is the overview of the FAST Act. I'm Lisa Guthrie, Executive Director of the Virginia Transit Association, and as many of you know, VTA is a proud member of APTA, the American Public Transportation Association, and we value their federal advocacy on transit. Today we're honored to hear from their government affairs team on the recently passed Transportation Authorization Bill, the FAST Act. We're recording this webinar, and it will be posted on YouTube with a link on our website along with the slides for it on-demand viewing. So anyway, just a little housekeeping here. We're going to ask you to type in any questions that you have in the space provided on the screen, and we're going to address those questions for the Q&A portion of the webinar until our presenters are ready to entertain questions. So please send forth whatever you have questions about, and we will address them. So this is how you do that. Look for the webinar panel on your screen and simply type your question into the question box. Although they will be answered during the webinar, you can submit your question at any time, and we will hold on to it. Remember that the audience is muted, so we won't be able to hear you. We'll just see what you type in. So with that, it is with great pleasure that I welcome our presenters for this webinar, Rob Healy, who's the Vice President of Government Affairs for APTA, and Billy Terry, the Senior Legislative Representative for APTA. So welcome, Rob and Billy.
Thank you. Thanks, Lisa. And we want to thank you for the opportunity to talk about the bill today. And as Lisa had said, if you do have questions while we're making the presentation, you're welcome to type them in, and we can try to respond to them as we go along. I think this is Lisa sent out, I believe yesterday, the APTA legislative alert that we did when we first got the bill on December 2. That also includes summary funding tables, and there are links on that alert to some state estimates that the FTA had prepared. And I would just warn folks that those are very much estimates. I think everybody knows that your formula funds are apportioned to a designated recipient or an MPO. They're often divvied up. So anyway, take that with a grain of salt. But I think hopefully we can embellish here, and Lisa, you're beating APTA's webinar to the punch here. So we're going to try to do another one of these in January for all of APTA's membership, and we are also in the process. We're going to try to put together both a summary, as we have done in the past, of the new law, and also not technically a ramsire, but a new iteration of the legislative language, similar to what we did on the last bill, which has notes on the side in the margins telling you how it's changed. So anyway, we have a new bill. I think that we've been waiting an awful long time for this. Fixing America's Surface Transportation Act, the FAST Act, and it really is. It's the first long-term bill we've had in a long time. Why don't we flip to the first slide here, if we could, Jamie? Thank you. So as I say, this is a long-term bill, 5 years. It truly is fully funded. So we'll talk a little bit more about how it's funded. But the fact of the matter is that when you authorize spending out of the mass transit account of the Highway Trust Fund, they put in offsets, so that all of the funding that comes from the mass transit is actually fully funded. It needs to have an obligation limitation on that spending annually under the Appropriations Act. And separately, the funding that's provided from general funds, such as the New Starts program and the rail money, is subject to annual appropriations. So that's effectively really a hunting license. So I'll talk about that a little more in a minute, but I would say that you know, this is the culmination. The last long-term bill we had was passed in August 2005, Safety Lou, and really that was a little more than a 4-year bill. It funded things through 2009. We then went and we had, between '09 and 2012, we had short-term extensions for the program. MAP 21 was passed in July 2012, and it authorized funding in 2013 and 14. And since the end of FY 2014, last October, we have been operating on short-term continuing resolutions, and the FY 2016 year actually started in October of this year. So again, you know, it certainly has been a long road, and I think one of the benefits of having a bill is, number one, the growth of the program, but also the predictability to do the kind of things that all of you have to do at agencies around the state. So I just very quickly setting this up, we also started, when we went to the House staff early this spring, they said, you know, expect flat funding, and we said, well, that's no good. We need growth. So again, we'll talk more about that. But as we went on, you know, first off, we had no bill as late as the beginning of July, and we had the long-term, you know, we had no bill in the House, and early in July, Senator Mitch McConnell, who's the majority leader in the Senate, and Barbara Boxer, Senator Boxer is the ranking Democrat on the Highway Committee, the Environment and Public Works Committee, introduced a 6-year bill. It only had 3 years of funding. They introduced that on July 21st, and they actually passed it before Congress adjourned for its August recess on July 30. So when the Senate passed the bill, and that was on July 30, as I say, there was hope, but it still took the House until November 5 to pass its version of the bill, and it was December 5 before this bill was signed into law. So if you want to flip to the next slide, please, Jamie. So this is, as I think the other thing about this is, as usual, it is a highways and transit authorization, and that's very common for the surface transportation bills. But this one also came with a rail title, and there's money in here for positive train control, there's money for Amtrak, there's money for state grants for intercity passenger service, and that rises pretty substantially, and I'll talk about that as well. Next slide, please. So we have the full bill is $280 billion from the Highway Trust Fund. In total, it's $305 with the general fund authorizations. And as I note here, the transit program, as it has in the past, is funded, about 80% of it is funded out of the trust fund, the mass transit account of the Highway Trust Fund, and that includes all your formula programs, Stay Good Repair, the bus program. We have a new bus program to talk about here. We have some growth there. So again, that's all out of the trust fund. That will be quite predictable, and the expectation is that money is there and will pay out over the next 5 years. So the bill runs from 2016, which, as I say, started in October, and it will run through 2020. The New Starts program is probably the biggest program. There's some research, FTA administration, and as I say, the rail funding, which has to be funded in the appropriations process. So we basically have a license to hunt for that, and you'll see when I talk about what the appropriations process is doing here, that right now, even in this current year, while this pulled up New Starts funding is still a little short of the authorization in the 2016 year. So that's the general fund component, and that's what we have to continue to fight for annually. Let's go ahead and flip to the next slide. And just to very briefly talk about, and this is something important, but as I say, the trust fund spending is paid for. That's a terrific thing. there was a fair amount of controversy about the pay-fors. As you can see from this table, most of the money came from the Federal Reserve surplus account, and it was transferred into the trust fund. So that, that didn't make us real popular with the Fed and some of the banking industry. But notwithstanding that, we will, this also does mean that at the end of this bill, we're going to need to come up with a new financing mechanism, be that vehicle miles traveled, or be it an increase in the gas tax, or some other sustainable thing. And I was, I talked to Chairman Schuster yesterday, in fact, and he indicated that he has a strong desire to establish some sort of a more sustainable funding mechanism prior to the expiration of this. So that's going to be an ongoing thing that we're going to be continuing to look for. And while many of these things are probably not the best pay-fors in the world, we have them in the trust fund, and that's the good thing. So next slide, please. Thank you, Jamie. So what do we have here? We have a $61 billion total transit program over the next 5 years. We grow the program that's almost $50 billion over 5 years from the mass transit account. You've got another. I don't know exactly what the number is, but from the general fund. So in total, this bill is going to go from, it's going to increase transit funding in year one by 10.23%, and it's going to grow almost 18% over the 5 years of the bill. And the general fund authorization increases, the general fund increases in year one by 16%, and it remains flat going forward. So the fact of the matter is here, I would just note, this is really pretty good growth. I was looking at this compared to even the highway program. Transit grows by 17.74% over the 5 years. Highways grows 15%. We're at 20.6% of the total right now in FY 2015. We actually go up to over 21% in year one because we grow a little faster than the highway program, which grows at only about 5%. We grow at 10%, and then they actually grow a shade more than we do over the years. But at the end of the term, we've actually gone from about a little over 20% to 21% of the total. So again, a pretty good outcome when it comes to Congress growing the transit investment here. Again, obviously, this is not as much money as we would have liked to see to address growth of the formula program, growth of the bus programs, growth of the, an ability to really address our state of good repair backlog. But I think it really is a very good start on that. And as I say, for the first time in 10 years, we have a predictable funding stream for the next 5 years, which will hopefully allow agencies to be able to plan for their capital replacement needs, operating needs, and other expenditures. So I think that's a positive here. And I don't think, we're not getting any questions yet, which is fine, but as I say, if you have questions, please feel free to interrupt us as we go through here. Can we go ahead and flip to the next slide here, Lisa? And Jamie, thanks. So one of the things, and I'm sure many of you were involved in this, APTA's recommendations called for, we put an emphasis on growth of the bus program. As I think all of you know, the bus program was cut dramatically under MAP 21 back in 2013. And while this bill would grow the program quite dramatically for bus, and it does a couple of things. Number one, it does grow the program by 62%, almost 63% in year one, and it grows it by 89% over 5 years. So the bus program will grow, and it will also have both a competitive grant program, which is really pretty unique. We have not had discretionary bus grants since earmarks were eliminated a number of years ago. And one of the challenges we faced here is you've got a Republican House and a Republican Senate, and what this means is they are actually providing money which the FTA will be able to distribute initially. And so that was a sensitive thing, but it was something that I think many of APTA's bus agencies wanted to see, both the continuation of a formula program, but they also wanted to see a discretionary component, and this really does it. So the program will grow in year one from $427 million now. That's exclusively a formula program, and it would grow to $695 million in 2016, and then it would grow to $808 million in 2020. Now, as I said, this is short of our goal. The program was actually at 894 prior to MAP 21, and we wanted to see it grow back to that level actually in the first 2 years of the bill. So we don't get all the way there, but this, the 62% in the bus program compares to 10% in the overall program in year one, and over the period you've got almost 90% growth in bus compared to 18% in the rest of the program. So I think that it does reflect APTA's priorities, and what it will do here is, so in year one you've got a $695.8 billion program. Within that total, you've got what do we have here? You've got I take it back. You actually grow to 719 in year one. No, 695. My bad. And within that program, you've got a competitive grant program of $268 million. You've got the formula program frozen at the current level, $428 million. You've got no low emission program is funded under the discretionary program at $55 billion, so that comes out of the 268. And for the bus formula program, and remember this is buses and bus facilities, you've got $90 million, which is allocated amongst the states. The rest goes directly to the to bus agencies around the country. So again, pretty good response here. It grows the bus program, creates a discretionary program, and as you can see on the slide here, $1.5 billion over 5 years, and that discretionary component of the program is about 40% over the 5 years. It varies a little, but it's in that 40% range of the total. So can you flip to the next slide, which also talks about bus and bus facilities? And just to give you a sense of, so here is a table that gives you, this is total funding for bus and bus facilities. Remember, 40% of this is discretionary. The balance would go on under the existing formula. So next slide, please. Thank you. So we have, again, everybody depends on the urban formula program here. I would say that you have, as you can see, the urban formula really grows very modestly initially, and it is, so we're growing from, what do we grow here? We only grow 2% in year one. You grow 10% over the period. So really, the formula program in general grew, certainly not as fast as we would have liked it. You did retain under the formula programs. You keep the growing states and the high density states, which is essentially a takedown on the formula. And I would say to you here, I think everybody knows in the House there was an amendment that was offered that actually got the bus funding a little higher than we would have had, than we ended up getting. But in so doing, you would have had agencies throughout the Northeast that would have sustained cuts of 25 and 30% in their formula funding. And one of the principles that we had always operated on is that we want to restore funding for the bus program. We want to grow the program in its entirety, but we don't want to do it at the expense of any individual existing program or class of APTA members and so forth. And so on the that created a problem when we had cuts in the 5340 high density program, which goes to the Northeast states. It goes down as far as Maryland. WMATA certainly gets some of that money, and so we ended up, the Congress did not eliminate that program, but in reauthorizing and it's half growing states distribution formula, half high density states. So under the bill, the growing states grows by a pretty significant amount, while the high density states grows almost negligibly. The growing states would grow about a little under 15% over the 5 years. High density states would grow only 2.5%. But the fact of the matter here is it holds the growing states recipients harmless while it emphasizes growth of the growing states. So I think that kind of also reflects where we were coming from on this. Can you flip to the next slide, please, Jamie? So rural funding, 5311, again, modest growth. This really tracks with the formula programs. The formula programs here grew modestly in most of these cases, but you basically have like the urban formula, the rural formula grows modestly but grows. So I think again, positive movement here, not dramatic growth, but it does grow. Both rural and urban formula programs will grow about 10% over the term, roughly 2% a year for both programs. So again, forward progress. Certainly, it doesn't address all of our needs, what we'd like to see, but very positive growth.
Yeah,
go ahead, Bill.
I just want to make one point. Under MAP 21 was the first time we saw our 100 bus rule implemented, which would have allowed systems in communities under 200,000 who operate less than 100 buses during peak service to be able to utilize capital funds for operating service, for operating funding. And then what happened was there was a small quirk. So if you were a demand response only property, you were prohibited from using your 5307 or your 5311 money for operating, and that was corrected in this bill. So there's a universe of demand response only operators who will now be able to utilize 5307 and 5311 dollars for operating. Just wanted to note that.
Thanks, Billy. Okay, can we flip to the next slide here, please? Thank you. So again, just and I think we want to. I'll try to pick up the pace here a little, so we're moving through all this. Again, 5310, seniors with individuals and disabilities, much like the other formula programs, grew very modestly, but again, grew. And we had proposed a substantially bigger growth in that program as well. Next slide, please. Is the so this is the State of Good Repair program. This is the old rail modernization program, and having said that, this goes out to to all systems that have rail more than 7 years old, and again, we see some pretty good growth here. This was grown substantially in the Senate bill while they were considering it. So this would go up by actually a little over 15% in year one, and it would grow by almost 24% over the period. So as you can see here, you know, and this is, I would say, I think in Congress, this reflects it as a recognition that there is a backlog of state of good repair, and whether, you know, that includes both bringing our bus system, our you know, replacing old buses, as well as bridges and rail and so forth. So there was, you know, we do have $88 billion in a backlog of state of good repair needs, and this goes to that in some measure. Next slide, please. And new starts, small starts, and core capacity was there was a great deal of discussion and amendments and back and forth on this. I think that the New Starts program, it grows the program generally, and that's on the next slide, which I'll get to. But I just want to say that right now, current law is that you can use you could receive up to 80% for a federal match on your New Starts project. And having said that, virtually no New Starts project, be it small starts, there's really no core capacity, but none of the existing New Starts, and certainly the New Starts with full funding grant agreements, have gotten 80% in recent years. So what they did here is they throttled this back, and this was something we opposed very strenuously, actually, and I think it does prejudice the planning process to some degree. If I'm a community and I'm looking at a highway project versus a New Start project, and I can get 80% on the highway project and only 60 on New Starts, that's a definite disincentive. It's something we oppose strongly, but they dropped the threshold for full funding grant agreement New Starts, big New Starts, to 60%. And having said that, they kept, for small starts and core capacity projects, they kept the 80%. So that's a good thing. And moreover, there were a couple of efforts here to say that right now, let's say I get a New Starts funding for a project from the feds, and I'm going to get 50% of my project cost. I can fill out the delta to 80% with surface transportation program funds, congestion mitigation and air quality, Tiger, TIFIA, et cetera. And so there was an effort to knock some of that stuff out. Dan Lipinski from Illinois put back in a number of these things, CMAQ, TIFIA, and Tiger, and actually the language drafted by the House was flawed. So when it got over on the surface transportation program, when it got over to the Senate, they said, we didn't do that, and no, we're not going to support it. So the good news is that you can still use all of those DOT flex funds or other funds, other federal funds, to match that, to pay for that delta between 60 and 80%, or if it's 50%, whatever it is. So that's all a good thing. New Starts funding increased from actually, I don't know, this slide is off here, my apologies. It actually increased from an authorized level of 2.1 now to 2.4 billion. And as I said, this is general fund. It was, so last year, while it was at 2.1, we actually got 1.9 billion. This year, it went to 2.4, and we have, that's a general fund program. It was funded in both the House and Senate bills at $1.9 billion, and the appropriations bill, which has been introduced last night, actually moves it not all the way to the 2.4, but it moves it to 2.1 billion 77 million. So a good start on that. This is so we're growing from $1.9 billion to over $2.1 billion, almost 2.2 billion, and I think that's a good thing. So you can see in here, the next slide, please. And unfortunately, I think we have old numbers in there, so I need to correct that. It's actually, no, I take it back. It is 2.3. It is 2.3. These are the right numbers. My mistake. I'm reading off another table I'm looking at here. So the program goes to 2.3 billion in 2016, and it runs through 2020. Next slide, please. So moving quickly through a number of other things here. This is Buy America. There was an increase in the domestic content requirement. This is, again, something we opposed. Our bus manufacturers and others said, and this applies exclusively to rolling stock, but it would increase the domestic content requirement from the current 60% U.S. content to 65% in 2018 and to 70% by 2020. I would say that the Senate added provisions on this, so while they increased it, and that's not the best thing in the world, they did add language on iron and steel content which says if you buy U.S.-made iron and steel and you shape it in Canada, it still counts as U.S. Content. So that's a good thing. And furthermore, if there is any problem in complying with Buy America content, and a manufacturer has to say, for instance, the radios here aren't made, the computer equipment is not made in the United States, I have to get a waiver. DOT has to, if they deny a waiver request, they have to provide in written statement where it can be found domestically, and they have to answer questions on why they didn't provide the waiver. So while we're not thrilled that the content went up, and we'll have to see whether it increases costs and so forth. And again, this is for rolling stock, so it's buses and rail cars here which is affected. Any question on that? Next slide, thank you. I would say, a couple other issues here. Some of this is shorthanded, but PTC is positive train control funding. There is $199 million in this authorization under the rail title for commuter rail installation of positive train control. That's not nearly close to what it's going to cost, but it's a good start. And there's also actually $50 million in the appropriations bill, which I'll talk about in a second. But for this year, the PTC funding is available in 2017. So this authorization is for 2017. In the appropriations bill that Congress is going to take up tonight, there's actually $50 million in this year as well. TCRP, Transit Cooperative Research Program. One of the things we asked for, this was funded at $10 million a few years ago. It fell to $7.5 million. It was down to $3.5 million. It was in the appropriations at $2.5 million this year, funded out of the general fund. Always been a problem to get Congress to focus on this. Well, we had recommended that they do it as a takedown from the mass transit account. They do that, so the point is we will have a predictable $5 million a year from the trust fund to fund the Transit Cooperative Research Program. There is also research funded under both the Highway Trust Fund, MTA, and the general fund as well. So we do have that in there. Zero emission buses are eligible under research and bus funding. And there's going to be, you know, we all know there's going to be a safety standards in this, so there's a review of safety standards and protocols to evaluate the need for a federal minimum standard on public transportation, and as it says here, it requires that the results of the study would have to be made public. Next slide, please. Couple things. So the state program, the Transit Intensive Cities Formula Program, which is at 1%, 1.5%, excuse me, now goes to 2% in 2019. We had asked on one of the things under the safety standards we got in MAP 21, where FTA is now got authority to regulate safety in the transit industry, rather than in addition to the state safety oversight programs. We had asked for, under MAP 21, you're required to say, what are my vulnerabilities here? And we said, you know, you really need to protect that from admissibility in court and so forth. And we did not get that, but we did get a study of should there be protections for required safety data. We think there should be. As Billy said, we did the 100 bus demand response fix so that if you have 90 buses plus 12 demand response vans, you're not kicked out of the small bus program. And there are some procurement reforms in here as well. Among them, you can buy. It will help to buy buses in kind of cooperative fashion, and I'm still trying to figure out the details of that, but that is in there. Next slide, please. More cats and dogs here. The bill establishes a pilot program for communities to expand transit through the use of public-private partnerships. And basically what this is a pilot, and the Senate bill had a provision in here which set aside a certain portion of a certain amount of the funding for new starts for projects that only asked for 25% federal funding, and they would get expedited treatment. So we were concerned that, well, gee, if there are no takers on that, we don't want the money to go to waste. So they made it a pilot program, and it will keep that in here if you're willing to do a new start project with 25% federal funding, you leveraging public-private funding, then you would have an expedited process. This is a pilot program which FTA will have to do. It eliminates the mandatory 1% set aside for transit improvements. It provides new language for the coordination of public transportation service with other federally assisted transportation services, so health and human services and so forth, to aid in the mobility of seniors and individuals with disabilities, and it funds a pilot program, and it also includes TOD eligibility with the TIFIA and railroad investment program. So, and those are both loan programs, but good things generally, we think. So with that, I'm gonna go briefly into the rail title, but let me, Lisa, if I may here, just say very quickly, just so folks understand, you know, we have an authorization bill that provides 5 years of authorized funding, but I've been getting calls already saying, well, you know, can you guys send us a table that tells us what we're going to get under the formula program, state of good repair, bus formula, et cetera, and so forth. And I would say to you, we really can't, with any predictability, give every agency what they're going to receive for the next 5 years. Probably the best way you're going to get a look of, well, how's this going to affect my funding is when the appropriations bill is passed, and so they introduced it today. They also kicked out the existing continuing resolution till next Tuesday. But the goal of Congress is to pass a new continuing resolution which covers all of your appropriations bills for the full 2016, and they're going to try to do that by Saturday. They've also, the good news is they've added the tax extenders bill here, and they've made in the appropriations continuing resolution, we will also get the transit commute benefit will be parity between transit benefits and parking will be equitable. So going forward, we're going to go from the current, I think it's $135 a month, to $250 and $255 a month for the transit benefit, and that was made permanent. And then the other part of it is we will also get the tax credit refunds for alternative fuel use retroactive for 2015 and through 2016. So again, both add-ons here, and I guess my point to the appropriations process is FTA will do apportionments and allocations for 2016 when they have both the authorization bill, which we have into law, and now when the approps bill is signed, hopefully Saturday or Sunday. FTA technically has 10 days to do apportionments, 10 working days, but in reality, they will probably do them early or mid January, and we need to follow up on that. I did not get a chance to talk to FTA this morning, but I would expect, so for the agencies, you should get a pretty good sense of your actual apportionment by mid-January, and using the tables that we have in terms of percent increases, you should be able to roughly estimate what you're going to get under formula programs for the next 5 years. But I would say that there are changes, whether it's the STIC program or changes in the formula factors, your ridership, your population, et cetera, which will affect all that. So I hope that makes sense. Can we flip to the next slide and go quickly through the rail title? So the good news is, again, Amtrak, and this is all general funds, I should say. So this is not fully paid for, and you have to go to appropriations each year to get this funded. But Amtrak is authorized at $1.45 billion in 2016. It rises to $1.8 billion in 2020. And with the Amtrak funding, there's a new structure. A portion of the money goes to the Northeast Corridor, and a balance of the money goes to the rest of the nation. The rail title has a state grant program with $2.2 billion in grant funding for national infrastructure and safety investments. Basically, this is stuff where states would be eligible to expand passenger rail service using applying for grants under this program, and that program is funded at $200 million in FY16. I'm not even sure what they put that into the approps bill as, but it rises to $650 million in 2020. So we're beginning to get a more substantial program there. It's not the kind of major high-speed rail program we asked for, but I think it's progress, and there is some predictability for both, certainly for Amtrak and so forth. So as it says here, all funding in the bill here is subject to appropriations, but good start. Next slide, please. Again, this is just a quick summary of the components of the $2.2 billion for rail funding that would go out. There's the Consolidated Rail Infrastructure Program, Federal-State Partnership for State of Good Repair, and $20 million a year for restoration and enhancement grants. Next slide, please. There are a lot of lots of safety stuff in the bill. we're going to be continuing to look at that. This is applicable to commuter rails here under the rail title. So again, we want to encourage our commuter rails to continue looking at this, and we're going to continue to look at it and see the impacts. Next slide, please. As I say, this is the rail title. It has a Northeast corridor and state-supported routes provision. There's some stuff on rail financing, shared use study, permitting reform. Next slide, please. I think now this is I would note this one on the top. It increases the liability cap from 200 million to 295 million. This is for passenger rails. That's the cap on liability in any single accident. It's going to be a problem for our commuter railroads because it's going to cost them more money to get this increased liability insurance. It does apply retroactively to the Philadelphia accident. What the congressional staff has told us here is that if you have a state cap, and I think Pennsylvania has a state cap of only $1 million. I think Boston has Massachusetts has a $10 million cap. It won't federally preempt state caps. So if you have a state cap, you dodge the bullet here. But this is going to be a problem for most commuter railroads. So with that, I would wrap it up. As I say, we are looking anxiously at passage of the appropriations bill, and welcome any questions you might have on any of this stuff. Thanks very much, Lisa.
Thank you, Rob. In looking at the questions that have been submitted, I think you have addressed most of them. Let me give it one last glance. There was a question about light rail, but I think perhaps that has been answered, as well as the other questions about the commuter benefits and the 75 or fewer buses to the 5307 program.
Yep.
Okay, here's one that was just submitted. What are a few simple facts we can transmit to the citizens who signed petitions and attended rallies for this bill? You can distill it down to some highlights there that you think are good talking points.
Yeah, I think number one, we need to get and we're doing this with our Voices for Public Transportation and so forth. But I think it's important that we keep the advocates engaged, where we can. And so one of the things that they need to do is they need to express. They need to thank the Congress. So it would be very appropriate to say, we really appreciate that Congress, and remember, this is not a big tax and spend Congress. And I would also say, Lisa, that this is, we also need to remember, yes, all of the folks on the line here provide public transportation service, but when Congress looks at this, it's a transit highway bill. And a rail bill as well, but the fact of the matter is, some of the members support investment in transit, some in highways. So I think it's important to express appreciation that Congress passed the bill, that they grew the federal investment in public transportation and addressing our infrastructure needs, that they have provided a predictable source of funding, which is, and to convey that this is very important both in the planning processes that we have and and for the agencies, certainly in the ability to do some planning on their capital, how do I do my capital replacement needs? How do I address my bus needs? How do I pay for my operating costs? So I think the predictability is really good here. I think, as I mentioned, you had Bill Schuster tell me yesterday that he wants to continue working on a more sustainable source of funding. So I think one of the things that if we can convey it, and it's a little nuanced, but is that that this is a great bill. It gives us predictability, but we also need to address the need for a predictable funding long-term funding mechanism, a sustainable funding mechanism, and frankly, you know, the gas tax has always been a very predictable and sustainable. If they had raised the gas tax by 10 or 15 cents, which at this point in time seems like it should have been doable, but trust me, it was not a popular thing and the president opposed it, as did the Republican Congress. But if they had raised the gas tax by 10 or 15 cents, you know, we would get to the end of this bill and we wouldn't be 40% short of even funding the ongoing program. So I think, you know, but again, I think at this point it's an expression of appreciation and a willingness to continue working with Congress on meeting the nation's transit needs, the community's transit needs, and so on.
Thank you, and that's a perfect segue, Rob, for what we want to talk about next, and that is about the advocacy aspect of this. We are thrilled that so many people did take action and communicate with their members of Congress on this, and as you heard Rob mention, Voices for Public Transportation is APTA's advocacy arm that has a e-advocacy component, and I encourage you to go online and sign up for that. I also want to talk about that we use here in Virginia through VTA, and some of you may have seen my emails about this before, about a program that we started last year. We use a local company called Muster, and it has worked well with those who are enrolled, but we need your help to grow our numbers. We ask you to share the message about this program in your communications to your staff and your board members and your riders, your support networks, and through social media. And this we'll show you some slides in just a minute about how to do that. Just want to point out that somebody on this call really helped us out a lot last year when we started this program by sending the message out to their ridership, inviting them to self-select and sign up for this program, this e-action program. And within just a couple of days, we had over 200 subscribers from this particular transit agency. And so now when we want them to take action, we have that many more people engaged in communicating with their delegates and their senators. And we can also use it at the local level. If you need us to send an alert to subscribers in your area, we can send it out on your behalf. With the General Assembly session fast approaching, we want to get the word out now to start building our grassroots presence. And nothing speaks more loudly to elected officials than communications from their constituents. So with that, we want to go through a couple of steps here and just a couple more slides before we end our webinar today. This first one is a screenshot of our website, and there is, if you will scroll down, you see a red bar there, and that bar invites you to take action. So just want to call your attention to where you can find this. Okay, next slide. Okay, if you click on that, it takes you to this take action slide, explaining a little bit about what happens when you sign up. Now, we do not use this for any other purpose than communicating with elected officials. So, so if they're afraid that they're going to get pummeled with all kinds of emails and spam, that's not going to happen, because we take this very seriously and only communicate for this express purpose. So if you click to sign up, it takes you to a page here about becoming a friend of Virginia Transit. They fill in their information. As you can see, it does ask for a street address. And that is so it will locate you in what legislative district you're in. And when you sign up, you'll get messages. This is a summary of one that we did last year with the big bill that the governor had put in House Bill 1887, and a summary of what was happening. Now, if you had been on the receiving end of this at the time when it happened, there was a message in a box that was to go to your elected officials supporting this bill, and you can edit it if you want, or if you don't have time and you simply want to sign off on what is sent to you, you can just, click and it sends the way that it's already finalized and ready to go. So is that the last one? Okay, so I just want to bring that to your attention and encourage you to please help us build our base of online supporters, because not everybody can come to Richmond and speak with their elected officials, and this is a way that people can take action with just a click of a mouse from their homes or their phones or whatever they're using to instantly communicate. So speaking of Richmond, I did want to remind everybody that we're having our Public Transportation Advocacy Day at the Capitol. This year we're going to be doing it in conjunction with Virginians for High-Speed Rail, and we have reserved a room in the Capitol starting at 10 a.m. that day, Monday, January 25th, in Senate Room 3. And we showed this picture on here because this is the entrance you will need to come in. It's the lower level of the Capitol, kind of the subterranean entrance off of Bank Street that you come in, and it's in the new section down there in Senate Room 3. And we'll be briefing you on some of the more critical issues before the General Assembly, and we'll have possibly some legislators speak and give you some talking points, and then send you to seek out your elected officials to meet with them that day. And that's open to anybody who's a transit supporter, that briefing and lobby day instruction. So bring people who are just activists and interested citizens from your community are welcome to come up for that. At 5:30, VTA will have our annual Transportation Choices legislative reception in Old City Hall, where we typically have it with the Buzz and Ned's barbecue. And all VTA member organizations can send up to 5 representatives at no cost. Of course, we'll have all the legislators and some of the members of the governor's cabinet invited and whatnot. So, so this is something that's always a very good time, a good opportunity to network, not only with elected officials, but with your colleagues too. So we hope you can join us that day. If there are any other questions about this, please feel free. You'll probably think of something after we hang up here today. So please feel free to send me an email or whatnot. And otherwise, this concludes today's webinar, and we hope to see you all on Legislative Day, January 25th. Thank you.
Thanks a lot, Lisa.